Welcome to Markets Now. I'm Michelle Rook along with Chuck Shelby with Risk Management Commodities. Seeing mixed trading both grain and livestock futures this morning. Over in the grains, we do see fractional gains in corn, bigger gains in soybeans, but setting back in the wheat. So let's start there, Chuck, and talk a little bit about the corn and soybean markets. We've held some support areas here this week that we've needed to, and so some of this may be a little short covering off of those technical areas, or what?
It was pretty critical yesterday. The beans went down into the 1330 range and were able to repel out of there, and we're building on some positive momentum today. I think after the report, we saw some fund money move around, but fundamentally the beans are pretty tight scenario. I think the trade is waiting to see what those early harvest results are. So it's good to see it turn around. It did what it needed to technically. Corn seems to be kind of stuck here. We can't go down too far. We rally back, so stuck in the range. But when you look at the fundamentals from the previous report, we had 2.2 billion. Not a lot of concern out there on corn. So at this point, take it as a positive. Beans are your leader, and corn's holding up.
So as we get the combines rolling, and it looks like it's going to be a really fast harvest, what are you expecting in terms of yield results? And will USDA have to come down, you think, on these yields in October?
Well, the difficulty of this crop is it's so variable. Our partner Sherman Newland's been harvesting corn, and it's 19% on one end of the field, 30 on the other. The drought-stressed areas of the field are impacted by some pretty low yields. So I think it's difficult to get a good handle on a crop like this. There are some really good areas around the country. We're fortunate where I live to have a good crop, I believe. But going forward, the kind of weather we've had in the last 3 weeks, it's been really dry, not much rainfall. So that's not conducive to really increase in yield. So I think as we go forward, we're going to hear some good, some not so good. But at the end of the day, I think probably over time, the yield is going to drop down some.
And then how much harvest pressure do you expect? And I know some of that's dependent on whether farmers sell or store. So what do you think we're going to see there?
If it looks like a wide open harvest, then that tends to lead to problems with, basis widening. And the other problem we have to be concerned about is the river levels that you've reported on. I think that could be critical, especially if the fast harvest develops, that we aren't able to move the crop out like we need to. So I think there's some concern going forward if the weather is wide open.
Yeah, and let's talk about the demand side of the equation too, because we had exports out this morning. Certainly we need to see some of that export business kind of pick up here, and just demand in general to come in a little stronger, don't we?
Yeah, and the good news today was China was a big part of the purchases of corn and soybeans. So that was a good sign to see. We just need a lot more of it. But again, we go back to we need to put it down the river. If the rivers stay dry all the way through harvest and into early winter, then that creates another problem. You can say it's sold, but if you can't move it or it takes additional cost to put it on trains to get to the ports, that's again a concern. So as we move into harvest, weather again is going to be critical for a different reason, not what the summertime weather had implications for the crop size.
Right. That's a good point that you make there, Chuck. Of the 30 million bushels of corn exports that we had this morning, a good share of that was China. That was a little bit of a surprise. Do you anticipate they're going to buy more corn? Because we would have thought maybe they'd be buying from Brazil, but are they having logistic issues getting stuff out?
Well, I think China bought a lot from Brazil. They booked a lot of ships. A lot of their space is already booked up. And I think the Chinese are value-based buyers. So when the corn market slipped off down below $5, they probably part of what they're looking at. The U.S. dollar is up again today, though. So got a little bit of negativity going on there. It'd be nice to see the dollar soften up. That would certainly, in the long run, help exports too.
Yeah, we've been at like 6-month highs on the dollar index, so that certainly is starting to become a bit of a headwind. And the wheat market kind of keyed in on that here for a while. And then coming out of the report, we actually had a bit of a rally. Today we're down. What is that? Just some profit taking or what?
I think so. It's just, I think we made the long-term bottom in wheat here. World supplies came down. As we move forward, I think at this kind of price level, I think it's supportive here. We're probably going to back and fill, maybe test out some of those lower levels, but in the long run, I think we can look at wheat at these values as being competitive in the world, and I think there's opportunities for wheat to rally as we move into early winter and into winter.
Yeah. What are you hearing or seeing in terms of acreage coming in here in terms of this planting season?
Well, in the Eastern Corn Belt, producers have been able to double crop wheat and soybeans last year. The soft red wheat acres went up. I think it might shift back a little bit on that because of the price of wheat, but beans are a very profitable price. So I think soft red wheat acres will drift back a little bit, but not dramatically.
Great. So, has the wheat market bottomed, do you think?
I think so at these
Okay.
kind of price levels, and especially worldwide wheat numbers are declining, and that's what we need to see. Although Russia continues to basically give away wheat, Ukraine production is just going to drift lower over time as the war drags on. So I'm optimistic that at these levels, wheat's made its bottom.
Okay. Let's talk about this cattle market. We had some new highs early in the week, all-time highs in feeders, and saw a little bit of I guess, a healthy correction. But are the funds back in here today defending their long position in the cattle market since we're up, or what's going on?
Yeah, I think so. I mean, it's a correction and an uptrending market that continues on. One of the concerns I've had here going forward is if automakers go on a prolonged strike and that impacts and trickles down through a lot of the other economy, I might have concerns in the long run how much demand for beef might slip off going forward. So today's a good day. Market's still in an uptrend. Exports weren't too good today for beef, but overall, nothing's really changed in the beef market. It's a tight market, and that will continue as long as consumers are willing to pay the price.
Yeah, and so far it looks like they have been able or willing to pay. I mean, we've kept choice boxes above that 315 level, haven't we?
Yeah, it's well supported. There's no lack of demand out there. The consumer's still in the market to buy. Will be interesting to see again if we do have these major strike implications out there. That to me, if that went on for a couple months, would be I think that could be negative for beef prices.
Absolutely. And maybe even a looming government shutdown. So we'll keep our eyes on that. So these high prices that we see in cattle, let's talk about that in relationship to hogs. Does that help or hurt the hog market? I
I think
mean,
it's certainly that's the best story you have for the pork market. We did see some lighter weights due to the heat, but overall, you got to see that the cattle market supports the hog market. The cheaper price cuts are what consumers are looking for, especially as inflation continues to spiral higher and the consumer is stretched on his food dollars. I think that bodes well for the pork industry going forward, and I think it's well supported and held up by cattle. And as we go forward and inflation gets worse, it's even more important that pork prices are where they are and allows the consumer to have a different, cheaper source of meat.
mhm. But because of the number situation that we're seeing and even the weights, upfront supplies are actually bigger, and maybe we're going to see those supplies lighten out as we get into the deferred months. Is that why we're seeing kind of this two-tiered market or not?
Yeah, I think that's the exact reason what's going on here. And, we do, from the pork producer standpoint, we have cheap corn. That's a positive, but I think it's all a numbers game. And if the numbers slide backwards as we move into winter and into early spring, another supportive factor for the hog market.
Okay, thanks for joining us as always. That is Chuck Shelby, Risk Management Commodities and Markets Now.